You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
You know, when that recording that just played, when it ends, I feel like I'm supposed to pop out of a cake or something. But anyway, thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one, that's our live training room. Now to get in there, you got to be a member, or you got to take the 1-week free trial. To take the free trial, just go to mytradingiq.com. See it right here, mytradingiq.com. At the top of the page, there's a link and a purple button. Click the purple button, fill out the registration form, hit submit. And Michael's got to take off early today, but he is going to join us later in the broadcast. But here's the thing. If you go ahead and do it now, we'll be able to get your indicators enabled today so that you'll have the weekend to kind of get familiar with them. And then your trial will officially start Monday morning. And then you'll have 5 consecutive trading days next week. Plus, if you follow the instructions that are in the email you get once you sign up for the trial, you'll be able to join us Sunday night at 6 p.m. Eastern when the market's open, because that's when we go to work. The Monday session actually starts for futures traders Sunday night at 6 p.m. Eastern. And some Sunday nights are quiet, and some Sunday nights we have as many as 20 alerts. You just never know. It depends on market conditions. So follow the instructions that are in the email you get and have fun with your indicators over the weekend. And then we'll pick up Sunday night or Monday morning. Okay? And at any time you have a question, email support@cfrn.net. And if your trial has expired, send an email to support@cfrn.net, and in the subject line put, "I'm ready to become a member." That's all you need to do. Valerie will send you the information you need. There'll be a link in the email she sends you. Click that, take care of business. She'll be notified that you're now an official member. She'll send you a couple more emails. Archive those in a folder somewhere, because there's a lot of information you're going to need over the coming months, even years. Yeah, I said years. We have members who've been with us since we first broke the airwaves in 2005. Good Lord, that's almost 20 years. Okay. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back at 12 noon for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. I'm going to give you the best way first. You only have to do it once. Go to mytradingiq.com, scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. It will log you into our platform same day. But more important going forward is every trading day, you'll get an email about an hour before the broadcast starts. That email has a link in it. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit there is you have access to the question box. I'm unable to monitor the YouTube question box until Michael joins us about 50 minutes into the broadcast. Now, of course, there'll be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, youtube.com/CFRN. You already know the YouTube part, so just remember the /CFRN. Not only do we broadcast live every trading day on our YouTube channel, simulcasting if you will, as we're doing right now, but we also archive each and every daily broadcast. Currently there's over 2,600 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way to see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Just pick some days at random if you're new. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. You get the idea. And of course, the more recent episodes are going to be more meaningful in regards to current market conditions and what's happening in the world. But there's millions, thousands, tens of thousands of teachable moments in those videos. So that library is there, and we've made it available to anybody on planet Earth with an internet connected device. Okay, we start each day with our daily devotional, a word of prayer, some news, a recap of the alerts. When Michael joins us, he'll give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for a half hour. And then we'll wrap things up with our good word for the day. So let us get into the devotion. Hey, and if you're tuning in via YouTube, be a champ. Hit that subscribe button if you haven't already. Maybe give us a thumbs up. Click that little bell. This way you're always notified when we go live. Plus, it helps other people find our channel. So we appreciate that. Now, the topic of our devotion, which we started yesterday, is investing in eternal treasure. Now, the last devotion was a 9-dayer. This one's only 3 days. So we'll finish it up on Monday. Our scripture today, 1 Timothy chapter 6, verses 17 through 19. And I'm going to share with you from the Message translation. Tell those rich in this world's wealth to quit being so full of themselves, so obsessed with money, which is here today and gone tomorrow. I can attest to that. Tell them to go after God, who piles on all the riches we could ever imagine. To do good, to be rich in helping others, to be extravagantly generous. If they do that, they'll build a treasury that will last, gaining life that is truly life. 1 Timothy chapter 6, verses 17 through 19. Paul, in this scripture, is encouraging believers not to trust in material wealth, which is fleeting and uncertain. Now, there's nothing wrong with having a nice home and a nice car. Do you need 20 cars in your underground garage? That's between you and God. Okay? But certainly God does not want you to be poverty stricken. If you have to send your kids off to school each day with tattered jeans are in style, but with holes in their shoes and that kind of thing. Remember when you were a kid in school, there was always that one kid, the one that got the free lunch. That was so embarrassing on Monday morning when we had to go up and pay for our school lunches. And then after everybody paid, then the kids whose parents couldn't afford the school lunches, they came up and got their tokens for their free lunch. You think God wants it? You think God wants you going to church on Sunday in a car that, as you pull into the parking lot, the bumper falls off and the radiator's overheating? No. God wants what's best for you. But your focus should not be on these material things. That's just a benefit of serving God. Financial success is not inherently wrong, but it should never be our source of security. Instead, we are to trust in God, who provides for all our needs. God's command is clear. Use what you have to do good. Be rich in good deeds and share generously. By doing so, we invest in eternal treasures that have far more lasting value than any temporary wealth here on earth. Question: are there areas in your life where you could be more generous with your finances or resources? Consider how you can bless others today, whether through giving to a ministry, helping someone in need, or supporting missions. Now, let me say this about missions. People always talk about, I'm going on a mission trip. You don't have to go to the other side of the world to help people. Chances are, on whatever street you live on and whatever zip code you live in, there's a single mom raising a child or children. So you see, every time you walk out the front door of your house, you are stepping into the mission field. Now, that single mom down the street raising a son, we'll say, not only does she have her hands full, just trying to put food on the table and pay the rent or the mortgage or whatever the case, but this young boy is growing up without a positive role model in his life. You might say, well, there's the male teachers at school. Yeah, well, our education system's kind of gone south. So maybe you go down and you introduce yourself to the single mom and say something like, hey, I ran into your son, Tommy, the other day, and if he ever wants to go over here to the park and have a game of pitch, I'd be happy to do it. See, you can be a blessing to people right on your street. You can be a missionary on the street you live. Please consider how you can bless others today. As you give of your time or your resources, remember that each act of generosity is an investment in your eternal future with God. Pray with me. Heavenly Father, remind us not to place our hope in uncertain wealth, but in you, who richly provides everything for our enjoyment. Help us to be generous and willing to share, storing up treasure in heaven, and laying hold of the life that is truly life. May our trust be firmly in your unfailing provision and love. We continue to lift up those affected by the hurricanes and the floods in Spain. Comfort the grieving, strengthen the weary, and provide for the needs of those who have lost homes and livelihoods. We continue to pray for an end to this conflict in the Middle East. Protect the innocent, bring healing to the suffering, and guide the leaders towards justice and reconciliation. And as the election draws near, just days away, we ask for honesty, integrity, and wisdom in every part of the process. Guide voters and leaders alike, and may the outcome reflect your will. We pray, God, that you unite our nation in peace and compassion, and that truth prevail. And a personal prayer request I've got some friends, Mike and Nikki Shuey. Their lives have been shaken like Job. I mean, health issues, financial struggles. They just can't catch a break. Mike and Nikki Shuey. God, I pray that you would be their strength and comfort, provide for their needs, and surround them with love and support. Restore what has been lost and bring healing and peace to their hearts and lives. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Happy Friday. Everybody been working for the weekend. I know you're all hung over from eating that candy last night, but just stay with me for the next hour. Okay. IRS announces 401k contribution limits for 2025. Ooh, that just scrolled across my screen. Anyway, let me give you the numbers from around the world, starting in the U.S. with the cash markets or the indices. And I'm going to show you why these numbers are where they are. And if you've been following along every day, you expected it. Currently the Dow's up 472 points. We got some bad job news. I'm going to share that with you this morning. But we're technical traders. And from a technical standpoint, the market did exactly what we expected it to do. So the Dow's up 472 points, which is almost 1.25%. NASDAQ is up 218 points, 1.25%. S&P 500 up 49 points, almost 1%. And the Russell 2000, our man in the street, up 22 points, just over 1%. In the commodity basket, crude oil up 93 cents, trading 70.19 last. That's a gain of almost 1.5%, or $950 per contract traded. Gold up $4.40, trading 27.5370 last. Silver down 3 cents, trading 32.76 last. In the Asian markets at the close, the Nikkei got a comma in it. Nikkei fell 1,027 points. That's over 2.5%. Not too often you see a comma in there. The Shanghai down 7. The Hang Seng actually up 189 points, almost 1%. And in the European markets at the close, FTSE up 86, 1%. The DAX up 213 points, over 1%, and the CAC up 80, again, over 1%. Anytime you have a market up over 1% or down over 1%, that's what I call a mover and a shaker. So we got quite a few of those today. So that gave us a mixed day in Asia. It was a green day for the UK. And so far, it is a green Radio Friday here in the US of A. Gonna end the week with a bang. Or the first day of November. Did you know historically that the first day of the month, which is when a lot of institutions typically do their buying and selling, historically the first day of the month is green? Somebody forgot to tell the Nikkei that, but actually it's probably already the second there. I don't know. Anyway. News. Last night, an estimated 72 million Americans, most of them ages 5 to 14, hit the pavement for trick-or-treating, including for the first time since 1938 in Des Moines, Iowa, where heavy rains Wednesday pushed back the city's traditional Beggar's Night, a Halloween alternative designed to cut down on hooliganism. I didn't even know that was a word. The age-old tradition of trick-or-treating has become increasingly expensive in recent years, with Americans spending close to $12 billion annually on costumes, decorations, and candy. Now, those costumes, if your kid wants to dress up as Superman or Batman or Cinderella, I got nothing against that. I'm no prude. But a lot of it's so demonic, I don't even want to be around it. Each household spent an average of $51 on sweets this year. We didn't spend a dime. A jump in cost due to nearly a 50% rise in cocoa prices since February. Over half of Americans decorated their homes or lawns for the occasion. Now, not on my street. I can't understand. We put up some Christmas lights, all right, after Thanksgiving. But it says half of America. Well, half of America wants to vote one way, and half of America, they say, wants to vote another way. So I don't know if there's any correlation there. Over half of Americans decorated their homes or lawns for the occasion, including roughly 30 million pumpkins and thousands of Home Depot's popular 12-foot skeletons. New Hampshire takes the crown for the state with the most Halloween spirit in 2024, as it hosts the highest number of haunted houses per capita in the U.S. That's an 8.1 on the jack-o'-lantern scale. And Germany has ordered the closure of all 3 Iranian consulates there yesterday, expelling 32 Iranian diplomats and leaving only Iran's embassy in Berlin. The move followed Iran's execution of German-Iranian citizen Jamshid Shermad. Shermad, 69, was executed Monday after being sentenced to death last year on terrorism charges. Following his 2020 capture by Iranian forces in Dubai, Shermad was accused of leading a U.S.-based Iranian opposition group and planning a 2008 mosque attack in Shiraz, killing 14 people and wounding more than 200 others. The U.S. and human rights groups criticized the trial, alleging Shermad was not given proper representation. And the other day we talked about Temu. Okay, that's kind of like the Chinese, well, Alibaba's the Chinese Amazon, but Temu is not far behind. And I told you, I admitted, my wife orders stuff from Temu because it's really cheap and it doesn't take that long to get here. But the European Union has launched an investigation into Temu, a Chinese e-commerce platform selling cheap clothes, home goods, and other products. Now, sometimes they're cheap in price, and sometimes they're cheap in quality, often. But she's certain things, like, women, they're big with these leggings these days. Man, you get them for pennies on Temu, and they're actually pretty good quality. The EU this year added Temu to its list of especially large online platforms meriting scrutiny under its Digital Services Act. All right, let's go to market news. Now, this is their reason for the market rally today, but I'm going to show you technically why it happened. Because we had some earnings that were good. U.S. stocks jumped and were set for a comeback on Friday as investors digested a big miss in the monthly jobs report, bad news, and welcomed Amazon and Intel's earnings report. Okay. Now the October jobs report, stunning. The U.S. labor market added far fewer jobs than expected in October as weather disruptions and worker strikes weighed on the labor market. Data from the Bureau of Labor Statistics, released this morning at 8:30 a.m. Eastern, showed the labor market added only 12,000 jobs in October, less than the 100,000 that was expected by economists. Now, you think that would be enough to tank the market, and under normal conditions it might, but I'll show you technically why it didn't. Meanwhile, the unemployment rate held steady at 4.1%, partly due to a difference in how the BLS collects data for that metric versus monthly job additions. Workers who were employed but earned no money wouldn't be counted as unemployed in the household survey, which is where the unemployment rate comes from. They would not be considered employed in the payroll survey, which is how job additions are tabulated. Okay. I'm not going to say it. Now, how does this affect the Fed and the upcoming presidential election? The White House and Kamala Harris's allies focused on the noisy nature of the report. The Trump campaign touted the low numbers while also continuing to lob evidence-free charges that they were manipulated. These numbers were cooked, just like all the other Harris-Biden numbers, posted Trump campaign senior advisor Jason Miller 6 minutes after the number was released, even as he also called the number itself a disaster for the Harris campaign. More bad news. U.S. manufacturing activity slumped to a 15-month low in October, and factories faced higher prices for inputs. That's the Institute for Supply Management Econ report that came out this morning. The ISM's manufacturing PMI fell to 46.5 last month, the lowest level since July 2023, from 47.2 in September. A PMI reading below 50 indicates contraction in the manufacturing sector, which accounts for 10.3% of the economy. The decline in the PMI could reflect the strike by factory workers at Boeing, which has halted the production of its best-selling 737 MAX, as well as its 767 and 777 wide-body programs. The labor strife continued to depressing industrial production in September. October marked the 7th consecutive month that the PMI remained below the 50 threshold, but above the 42.5 level that the ISM said over time generally indicates an expansion of the overall economy. The survey has, however, exaggerated the weakness in manufacturing. Now, how do you turn bad news into good news? Federal Reserve policymakers look all but certain to reduce short-term borrowing costs by a modest 1/4 percentage point at their policy meeting next week. Their confidence that the labor market is cooling but not crashing likely, despite new data showing U.S. employers added fewer workers in October than in any month since December of 2020. Now, they were expecting 100,000 new jobs. They got 12,000. Maybe the Fed will give us another half-point cut. We really need it because their last half-point cut didn't do anything for mortgage rates. Now, if you think it's bad here, Argentina's central bank lowered its benchmark interest rate Friday for the first time in nearly 6 months, as President Javier Milei continues to oversee a slowdown in inflation in the crisis-prone economy. The Monetary Authority cut borrowing costs to 35% from 40%. Now, what are we at? 5.25%? What? No, 6. Whatever it is we're at now, we're like 6%. Argentina was at 40%, and their Fed cut it to 35%. But Milei says he's going to get rid of the central bank, so good for him. Thomas Jefferson warned us way back in the day. He said a surefire way to destroy this America we're creating is to create a central bank. If you've never read The Creature from Jekyll Island, it's beyond its copyright date. You can read it for free on the internet. A group of rich men took a trip to Jekyll Island. They were supposedly duck hunting or fishing or whatever, but they were cooking up this scheme to create this thing called the Federal Reserve. See, most people, not you guys in the audience, but most people think the Federal Reserve is like part of the federal government. Yeah, like FedEx is. It's a privately owned corporation by very wealthy families. And after this trip to Jekyll Island, they came back, and like at midnight before Christmas, I don't know, it was really weird. They put this before Congress and got it approved. And so the Federal Reserve prints money and loans it to the American people at an interest rate. That's why we have $35 trillion in debt. Now, John F. Kennedy wanted to shutter the Federal Reserve. See, originally, the way the Constitution was written was the U.S. Treasury was supposed to print the money. Now, they don't do a lot of printing these days. They just move decimal points on the computer. But here's my point. Thomas Jefferson said, if you want to destroy America, create a central bank. And now here we are. I rest my case. Okay. S&P E-mini futures, this is the daily chart. We talked about the 24% Fib retracement being good support and that it should lead to a good bounce. It bounced all the way up to the 24% Fib extension. But we're off the high of the day. If we close near the low of the day, then that means the institutional traders aren't convinced and don't want to carry this home over the weekend. So they're going to take profits from this rally, and as they take profits, this thing will drop. Okay. Now we know we have support at the 24% Fib retracement. Below that, we've got the low of October 8th, which is at the lowest Fib extension. And if we take that out, we're probably headed to the previous bullish cross, which is also the 38% Fib retracement. Institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, stick charts, and range charts. Why? Has to do with account size. They trade in tremendous size, so they move price. We serve as their liquidity. But that's okay. We can still make money. I encourage you, whether you trade futures or stocks, crypto or Forex, ETFs, whatever you trade, spend 2 minutes with the daily chart before you begin your trading session. Okay? It's a free look over the shoulder of the deep pockets that move price. So with all that bad news this morning, one would think the market would collapse, but from a technical standpoint, we know that when we hit a Fib retracement on a daily chart of anything, we almost always get a bounce. And it bounced right to the spot where we would expect resistance. It's 24% Fib extension. Now what, you say? Well, part of looking at the daily chart before you start trading, whatever you trade, is not only that you're looking over the shoulder of the deep pockets to see what they're doing today, right now, okay? But it helps you identify major areas of resistance and support that you can't see on your smaller time frames. So 2 minutes, get the big picture view, go to work. Now this green line is the BBC. It stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices, higher prices. Now you'll notice that when price pulls back to the BBC, whether it pulls up from below or pulls down from above, the pullback holds more often than it doesn't. However, we know eventually it will trade through, like it did here, but then on the pullback, it held. And then a leg and a retracement, and it held. Then a historic rally, and pullback held, pullback held, pullback held, till yesterday when the pullback didn't hold. Took us all the way down. And see, that's just the shallowest possible Fibonacci retracement, the 24. This bullish cross, whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. It also kind of acts like a magnet. Look over here where we had a bearish cross. That's when the red line gets below the green line. When price revisited that area, good resistance. So when price revisits this area, we expect good support. Okay? All right. Now, markets are fractal in nature. You can apply the BBC, that green line, to a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart, and it will function exactly the same on every market, on every time frame. When price gets above the green line, expect higher prices relative to the time frame you're looking at. Price gets below the green line, expect lower prices relative to the time frame you're looking at. Oh, and I forgot to give you this. Got ahead of myself. Logic 247, that's our 24/7 around the clock E-mini alert service. Now, Valerie had to be at her church early this morning at like 5 o'clock. So she's going to finalize the whole week's recap this afternoon. So the last recap we have was through 9 p.m. last night. We're in week 326 of Logic 247. And over the last 326 weeks, we've issued over 18,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that I teach all of our passport holders in their one-on-one mentoring sessions. Now, this is going to change because I put out more alerts today, and some of these that we're waiting will get reconciled. But since the markets opened Sunday night, this past Sunday night at 6 p.m. Eastern, through 9 p.m. last night, I issued a total of 64 alerts. 3 never triggered. We were still waiting on the outcome of 14. That gave us 47 actionable alerts, of which 8 or 17% would have been stopped out, again based on market structure. And that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now keep in mind the logic alerts, okay? It's not for you to just trade them so that you don't have to learn how to trade. I know some people make that mistake, and it is a mistake because, well, I'm no spring chicken. So at some point, and I'm not planning anything soon, I'm not going to put out alerts. There'll come a day when Dwayne won't put out alerts, believe it or not. Okay? So use the alerts as they're intended to learn how to spot potential support, resistance, and find windows of opportunity in the market. That's the real reason for them. You can still trade them, but just make sure you're using them to learn how to read the chart, because you're never going to become a trader until you can properly read the chart. Now, our original alert service, the concierge trade alerts, they're a little bit different. If you're a member or trial member, make sure you read this, and if there's anything you don't understand, ask me in Telegram, okay? Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs don't come out around the clock. They're published shortly after the Globex opened each evening. Last night I got them out right at the open, 6 p.m. Eastern. So what that means is every member, every trial member, had these targets for the ES, the Dow, the Russell, crude, NQ, crude, gold, silver, and bonds. They had all those targets the moment the market opened. So let's go to it. See how we're losing steam here? Okay. That bad news, the technicals have already done their thing and give us the bounce. Okay. Now the reality of those economic reports this morning, they're going to start to sink in. That's my observation. All alerts are created on the 30-minute chart. The logic alerts and the concierge trade alerts. This is the same BBC. These are the weekly trading zones. Okay, those are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support till proven otherwise. Okay. Here's the open last night. We were below the BBC, but we had support below us. Red and falling, once it turned to blue and climbing, that's an indication price is going to try to get above the BBC. And it did. So we got a leg and a retracement, leg and a retracement, and then a leg that took us all the way up to the target and to the zone at 57.96/97. That was published Monday morning, 6:15 a.m. Eastern. Now, when price encounters a weekly zone, 70% of the time you're going to get this consolidation. Sometimes it's only 2 candles. Sometimes that's 4 30-minute candles. That's 2 hours. Okay. 20% of the time you'll get rejection, and 10% of the time the slice. So here we had the perfect stack, as I call it: price, step line, BBC, price, step line, blue and climbing, BBC. And so let's say you wanted to get above these highs before you went long. So you got in at 57.78. Price rallied all the way up to 89. 11 points. I only need 2 points to get your goal for the day. And if you stayed with it, you got even more. Now notice that the black step line crossed blue and climbing on the way up. That black step line was on the left side of blue and climbing, but once it crosses to the right side of blue and climbing, we expect price to retrace back to the BBC. Then the question becomes, well, will it hold or not? Well, we don't know. Got to wait and see. We don't pretend to know what's going to happen next in the market. No one does. When God created Adam, he did not give him the ability to change the past or know the future. However, once you learn to read a chart, you can know with a great degree of certainty what the next high probability move is. Pull back held, pull back held, and it held, and it held. So if it holds again, then we'll have an opportunity to trade to the upside. If it fails to hold, then let price get below these two low, this little double bottom right here, and then just trade this area right here, 57.47 to 57.42. That's 5 points. You only need 2 points to get your goal for the day. I'll even draw that window out so we can talk about it on Monday if price goes there. Okay? All right. On the Dow, here's where we opened last night. We dropped to the weekly zone and price got rejected. Remember, 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. I'll show you a slice when I see one. Oh, here's one right here. See how this 30-minute candle sliced through the zone like it wasn't even there? When it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice, right up to the next zone. Which, see that bearish cross? Bearish cross leads to an extended move. First time price revisits that area. It just so happens that the bearish cross happened at a weekly zone. So there was 2 reasons for the market to find resistance there. Now the vertical lines separate today, Friday, Wednesday, Thursday, Wednesday. If I scroll back, you see Tuesday, Monday. Step line has crossed, blue and climbing. See that? Where's price going? To the BBC. Then you got to wait a minute, like 30 minutes at least, to see if it's going to hold or not. It might spike it and then bounce. We give you the information you need, we give you the tools you need, but our good word for the day, starting yesterday and we're going to continue today, is about patience. We can't give you patience and self-discipline. That's between you and God. So make sure you stick around for today's good word for the day, and if you missed it yesterday, go check it out on the YouTube channel. Okay? All right. Well, that takes us to the Russell. Here's where we opened last night, and we dropped to the short target. And we missed it by a couple ticks. 4 ticks. Yeah, missed it by 4 ticks. When the market finds support, it's going to go look for resistance, which it found at the zone. That sent it back down to blue and climbing, support. And that sent it up here. And then we caught a retracement. And then we made a run all the way to the zone. And then we continued in the next candle up to the target. Overshot it just a little bit. Then the step line crossed blue and climbing, and we're already back on the Russell at the BBC. Now, earlier I said it might spike it and then bounce. This is exactly what I'm talking about. Okay, this red candle has already come down through the BBC. Now it's pulled back. This candle has 8 minutes left. Okay. Now that's my time because I'm on Pacific time. Oh, don't forget, time changes this weekend. Spring forward, fall back. Yeah. Except in Arizona, we don't do daylight savings time. So it just means that the market open for me will now be 7:30 a.m. instead of 6:30 a.m. Resistance to support. That's like a work of art. NQ. Here's where we opened, and we did get above the BBC, and we did attempt higher. Now you'll notice that the highs correspond to these lows. The step line is crossed. We've already pulled back to the zone. We may pull back to the BBC. Okay, that covers the indices, but we're going to pause for a moment because Michael's here. He's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on TradingView. Then I'll come back. I'll finish that recap of the alerts, and I'll wrap things up with our good word for the day.
All right.
Okay, buddy,
Here
looks
we
good.
go. Excellent. Good. Let me refresh this page, and we'll get rolling. Here we go. Good afternoon, everyone. Today is Friday, the first, I need to get T out on that, the first day of November 2024. Now, if you have not taken a free trial with us, now is a great time, because if you sign up for the free trial now, you get it over the weekend and all of next week. To do that, all you need to do is go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on the purple button. It's going to bring you to this page that I did this morning to be all set up for next week. Now, when you do this and get set up for next week, down here, all we ask for is your name, email. All we ask for is your name, email, and phone number. Down at the bottom, if you have Ninja Trader and you want to use Ninja charts, you got to give us a machine ID. If you're just going to trade on Ninja, we don't need the machine ID. If you're going to use TradingView, and we highly recommend you use TradingView for your charts, give us a TradingView login ID. Once you do that, hit the register button. Okay. Once you register, you'll be sent all the information you need to get into the room in the morning. All right. So today is the first day of the month. So, we didn't start out like we did last month, but we did have a positive day. It was a little complicated. I should have gotten the goal on the very first trade, or the second trade, something like that. One of those trades, I should have gotten the goal, but I only got 8 ticks in the beginning, and then I stopped out on one after that, and then it was just back and forth for a little while. But anyway, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today we made 104 ticks on the NQ. We lost 25 on the Russell. We made 6 on the YM, and we made 7 on the ES. That put us at 512.5 on the morning session. Today it took 71 minutes and 16 trades to get to the goal for the day. At that point, we're up $1,540, so we took a total of 21 trades this morning. So on the month, first day of the month, obviously, 512, averaging 512 on the month. On the year, we're now at $100,882 with one contract over 205 business days, averaging $492 per contract per 2-hour business day. Now, the 2420 blueprint, we dropped down a little bit today because it took 71 minutes. But if you quit trading when you get the goal for the day and you add one contract a month, that's why we went to 11 this month. We did it all month last month. We had our goal for the day all month last month, and we earned $2,000 per contract. To go to the next contract last month, we only had to earn $20,000. And we earned $33,250 quitting when we get the goal for the day. This month, so far, we have to make $22,000 this month to add another contract into next month. And so far, we're doing pretty well with that. We're up $1,540 on the first day. Now, this month, we do have some holidays this month, and next month we have holidays. So as far as business days go this month, we have 5, 10, 15, 16, 17, 18 more business days. We're going to have 19 business days this month that we actually trade, I think. So we'll make the most of it. Now, so far this year, you would have had to work 59.8 hours quitting when you get the goal for the day. Quitting when you get the goal for the day. And you would have averaged $2,848 per hour. All right. If you were to follow the 2420 blueprint, quit when you get the goal for the day and add one contract per month. That seems like a lot today. A lot to say anyway. All right. You see I have these alerts popping up. I created them for all the markets, and it actually tells you what to expect. This is from the larger time frame. We just had a cross on the larger time frame below the bottom level down here on the TV trades range trigger. That suggests that price is going to start moving up, probably back up to the BBC, giving us an opportunity to short. Okay, these things have been on, pretty well spot on all day, and there's no reason they shouldn't be all day. When you get one of those, for those of you guys who have this, when you get one of those, what you want to do is jump over to the larger time frame. So this is a 60 range. I should probably put one of those up here too. Why don't I get rid of what I'm not using up here? I'll get rid of the 15 range, and I'll add on the 60. Okay, so if you jump to the 60 range and see what the BBC looks like. So you came down to a bullish BBC, even though it pulled through the BBC. Down here, this is suggesting it's going to run up 60 ticks, at least one bar length up. Okay, that's what it's suggesting. Now, this is not a really bullish look right here, pulling this far deep into the ribbon. It's not really a bullish look right here. It was more of a bullish look back here when it did it back here or back here, either one of those. But that's all you have to do. Just jump over here to the larger time frame if you want to and see what it actually does look like there. It is suggesting it's going to pull back up here and then push down some more. Okay, so I said all that to say this on the YM today. Once again, the YM was not easy. We started out right here on the YM. We had a minus 25, then we had another minus 25, so we're minus 50. Then on this one, we got a plus 10. That put us to minus 40. And then right here, I got a plus 47 is what I got on that one. Or I think that was, no, plus 44. That should be. Yeah, that's what it is. I'm sorry, somewhere in there, it was a plus 44. That's what it was. I got a plus 44. That brought me to positive 4. On this one, it's a plus 44, got me to positive 4. And then on this one, I got 2 more ticks. It got me to plus 6. And that was where we ended it for the morning session. There was one more trade right here. No, it wasn't. I'm sorry, there was a trade here. And you wouldn't have taken that one because that one would have stopped you up. Then you get into the break. During the break, there was nothing. Nothing during the break that you could trade. It's almost got one right here right now, but it doesn't quite have it. All right, I'm going to do the Russell last because I have some extra stuff I want to say about the Russell when I get to it. So we'll do the ES right now. On the ES today, we really, did I have 2 trades? I did have 2 trades. I knew it. I was up 15 ticks on the ES. So I had an 8 and then I had a 7. So this is 15 ticks. I don't know why I didn't go back and look at that this morning. I'm going to fix that in here too. Because the ES, we had 15 ticks. I knew I had 2 trades on that. This becomes a 22. We had 2 trades. The first one here was a +8, and the second one over here was a +7. And that was all we had on ES. In here, I was showing how when this happened on this market, and it happened on all the other markets at the same time, how it was likely a turning point. And you'll see where it was highlighted right here at 10:52, right around that time on all the markets. I think I highlighted it. You might not actually see the yellow thing on it though. Might not. I don't know. But we didn't trade anymore with ES. There was one more nice trade right here before the break. There was nothing through here that you could do and nothing here that you wanted to do. That was all before the break. Then the break came and the break went, and there was one trade here that you could do right there. There was a nice trade for the move down, another one right there for the move down, and another one right there for, actually this one right here was a trade that would have gotten you a break even. If you got a good entry, it would have gotten you a break even. You wouldn't have had that one. But either way, you're not looking to trade 100 times. You're looking to get the goal for the day, especially on a Friday. Get the goal for the day and be done for the day. The next trade was right here. This one right here was the next one. Going in the other direction, it looks like this trade right here was the one. Right, and it flipped back around, gave you one trade right there, and then it just gave you another one right here, right now. Okay, so this one right here should push down to the price, well, at least. I'm not in it, but that's what it should do. Okay, let me bring this box up and see if anybody has any questions about anything in there. Okay, I don't see any questions yet. So we'll go to the NQ now and see, this was the same place right here where I said it looked like it was going to be a turnaround. You asked me that this morning, Chris, remember? And I said that was an indication it's probably going to turn around when all the markets do the same thing at that point. But as you can see, we had quite a few trades here on the NQ. All right, we started out with this one and we got 8 ticks profit on that one. Then we had a break even. Then we stopped out on that. That put us down to -28. Then we had that one right there. That was an 8 tick. We got to -20. Then okay. All right, this is the NQ. -20. All right, that's it. That's it right there. Okay, it makes sense now. There was a stop out in here somewhere. It's way over there. That's not the one that I was thinking of though. Maybe it is. Yeah, it is. It looks like I missed all of these positive trades. And then I got this stop out that put us down to -56. Then we had a little bit of a win right there. That put us to -24. And then we had, this is the same spot. And then we had a 48 tick there that put us to +24. Then we had a, all right, there's some stuff that got messed up in here, but there's a 24 tick in here that got us from 48 up to, no, there's 24 that got us to, from 24 up to 48, and then another 48 that got us to 96, and then another 8 ticks that got us to 104 is what it looks like at the end here. That's how it all ended. So this is how it went. We went -8, I mean +8 to -28 to -20 to -56 to -24 to +24 to +48 to +96 to +104. That was it. But it seems like I got a couple of these arrows mixed up. Like this red one should be over here somewhere, and all of these blue ones should be over here or something like that. But anyway, that's how we ended it for the NQ. Now, during the break, let's see, during the break, once it established it was going down, there was a short right here, put in a lower swing, another short right there, put in a lower swing, another short right there, put in a lower swing. No, that one did not put in a lower swing. Okay, then it finally did over here. Another one right there, put in a lower swing, another one right here, did not put in a lower swing. All of those were profitable trades. That one, that one, that one, that one, and that one. All profitable trades. If you're just trying to get your goal for the day, there's no reason to not get it right there. And I was saying earlier, you know, the half hour between 11:30 and 12 is often a great time to trade. right? When the European markets close and it's just the US markets. There was one more trade right here during the break. It was a nice one. You could have taken that. Then there was nothing for a little while. Nothing for a long while. You get the weekly trading zone, keep your data trades, and you get all the way over here, and you still have nothing. All right, so we ended with plus 104. We ended up with plus 104 on that. Now, I'm coming back to the Russell because I've been making this recording on the Russell for the last 2 hours, 3 hours now, of what it's been doing little by little. All right. So I'm going to blow it a little bit and say, I'm going to start the recording on that again. So we ended the morning session after price had made this move up, then it came back down and it gave this little bit of a trigger right here, right? We ended the morning session. I said it was going right into the weekly trading zone, so I didn't want to take that. Now that is a key thing that you're going to figure out over time. You don't want to trade when you're going right into a zone like that. So I didn't take that. See that 100 tick move up. Look for that on the NQ. So I didn't take this. All right. And what we were looking for was to see whether it was going to continue the trend up right here. And you see it did not continue the trend up. It made this move up, this pullback, and did not continue the trend up right here. It went up. This is what it did. It went down. It went up above this level right here. Okay. This one here went up above that level. Then it pulled back down. It pulled back down. And went up again. It looks like it pulled back down here too. So I got one more of those legs in there. But this is the one that we were talking about where it went right up into the zone. We didn't want to take that right in here. Didn't want to take it going up into the zone. And to really commit to the upside, it had to get up above this level, up above this level right here. I can see it failed to do that. So then this original low way back here comes into play. This low right here comes into play. And you can see it just crossed down below that. And look at the time that's elapsed. From the time I started this video at 10:53 to right now at 1:07. This, the Russell's moving really slow today, but if you extend this all the way out here, you see what it's done now, right? It's whipped up through the top and all the way down through the bottom. You couldn't trade anything in here because you didn't have a lower swing from back here. You did have a higher swing here, but you couldn't take it going into the weekly trading zone. So it turned around. And this is the new setup that's happening now. So the continuation of this video, I'm actually going to stop the video here, but it went up like this. It actually gave a higher swing, and then it came down like this and got back into the top. But it didn't really give you an indication here to do anything. That is this right here. It didn't give you an indication to do anything. And now it's gone down like this, below this level right here. And so now the pullback is going to be up into this area right here. That's what's happening right now. The pullback up into that area. And if it does pull back up into that area, then that would be an indication to take a short. All right. We don't have a weekly trading zone right below us or anything like that. So this is turning out to be something that we would want to probably take a short on. So I'm going to pause the video right here because I still have another 22 minutes to trade in this session. Okay. All right. So we'll come back to this because that is what's happening here. And when I'm done with this video, it'll be in that it'll be in the live trading room recording area. Okay. For all you guys who are curious. So now I'm just going to trade. I am going to say this: if you have not taken a free trial with us, go here. For those of you guys that might be catching up on YouTube right now, go to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that button. It's going to bring you to this registration page. All you ask for is your name, email, and phone number. Then right in here, multiple choice questions. If you have NinjaTrader and you want charts, give us your NinjaTrader machine ID. If you just trade on Ninja, we don't need the machine ID. Do recommend you get TradingView charts because that's what we're using. Okay. All right. So the Russell right now, we want to see this get up into the overbought, and that would give us what we're trading. We want the same thing to happen here on the NQ and the same thing to happen here on the ES. All right. The YM is, we want it to happen on the YM too, but it looks like it's a little further away from happening there than anywhere else. Okay. All right. Now let me get all my DOMs where they're supposed to be. It looks like I'm missing my Russell DOM. It's way over there. Okay, bring that over where it's supposed to be. And we will now get ready for trades. Over here on the NQ, we want that to get into the overbought. Okay. And over here on the ES, we want that to get into the overbought. Okay, we did not get into the overbought on that up close. That is surprising on the NQ. We didn't get into the overbought. It's going to take another up close to get into the overbought. We're not going to have a trade there. Similar thing looks like it's happening here on the ES. So right now we're waiting to see what's going to happen with the Russell. The YM is starting to pull back as well. All right. So I haven't gone to see what everything else is doing here so far today, but let's go and look at Bitcoin. We talked about this pullback right here on Bitcoin, right? That's 50% retracement right where we are right now. So we talked about that. Yeah, that's what we were talking about. We'll see if it bounces off that now. This is what it should do. Once the pullback is final, this is the level up that it should do. Okay. All right. So we need an up close here on the ES. I mean on the ES. We need an up close there on the ES. We need an up close there on the NQ. And everywhere we need up closes to get trades. But yeah, you can see the Bitcoin came up, put in a brand new high, and now it's in the pullback portion of this leg up. So it is what it is there. Let's go to this gold. Now I want to look at gold on like a 30-minute. Okay. This was the huge move down with gold yesterday. This is a retracement of the move down. All right. So let's just look at that in a little more detail. This was our leg down. All right. And a 50% retracement of that leg is right about what we had yesterday or today, I guess. This is our 50% retracement of that leg. So what do you expect now? Anybody? Anybody?
Prices.
All the way down here, $2,704. That's what it's looking like. We'll see if it actually continues and moves down. It's going to break down below this level right here, below 2733. If it does that, then I would prep for a big move down. Another 50% move, 50% of this, or a duplication of this leg is what I would prep for if I were trading gold, the XAU USD, if that guy's watching today. The YM again, the Russell. Let's look back at the Russell. We are getting, okay, I'm going to go back to the Russell right now. Okay, because the Russell is at a point where we can actually place the trade. We've gotten into the overbought. We're expecting it to pull back up into this area right here. I don't know how far up it's going to pull, but I do know that right now we can place a trade on the Russell if we get a down close and it pulls it out of the overbought. So it's at 20.5 right here. So I'm going to sell 18.5. 20 ticks below the top of the bar. Now, use a 19 tick range bar so we can do that calculation really quickly. We use range bars because if we know where the top of the bar is and the top stays where it is, we know exactly where the bottom is going to be. The bottom is going to be right here at 18.6. That is 19 ticks away from the top. So if the bar is going to close down, and if it does close down, it's going to satisfy the rule for a trade setup. If it does close down, I already have my order in place, ready to go to fill me somewhere right around this area. Okay. And Hal has a message in there for you, and this is a perfect place for it.
I just answered him. Yeah.
Okay, I'm sure he probably said something just like me. All right, so we're waiting on the Russell right now. We have the order ready. I'm going to go back over here right now. Okay, we have the order ready to go on the Russell. The only issue with the Russell right now, the only thing that's going to change it is if it goes up above 20.5, like it looks like it's going to do right here. Okay, so now it has gone up above 20.5 is 20.6 now. So this has to go up one tick.
So the entry price on the Russell is now what?
18.6. 18.6.
Oh, just one.
As long as yeah, it's just one tick higher. As long as the high really is where I think it is, and if I do this, I hover over that, the high is actually, it's saying the high is still at 20.5, so it's gonna be 18.5. Okay, if I click on that, let me just check it one more time. Yeah, the high is 20.5, so it's 18.5 still. I'm looking over here at the high, right? So now the high has changed now. Now the high is up to 19.2. So that means, is that right? 20 ticks below 19.2 is going to be 17.2. Is that right? Why am I going the other way? I've just checked this. All right, so the high up here is now saying the high is 20. Am I looking at the wrong? Oh, I was looking at the low on that. I wasn't looking at the high. The high is 20.8. Okay, so 18.8. That makes sense. I was losing my mind there for a second. I was looking at the low, not the high. So the high is at 18.8. I'm sorry, the high is at 20.8. So we're going to sell 18.8 now. All right, you just got to move it up a little bit to 18.8. And I actually like that it's pulling back a little bit without actually closing up. Okay, so it's a deeper pullback. That's good.
Locked
and
and
the overall
loaded.
structure of it.
18.8.
Excellent. I mean, I'd actually like to see it close up and get up into the ribbon. Is what I'd like
Yeah,
to
that would
see,
be
but
nice.
I don't know if we're gonna though. That would be right here. There is some resistance right up at this level, right here, and that's right where the ribbon is. So I'd actually prefer it to close up and us have to do all this calculation all over again. All right. So the NQ larger time frame is saying look for 100 tick move down. Let's go up some more. It just did. It's up in the ribbon now. This is exactly what we're looking for. So the high now is at 21.5. So now we're going to be selling 19.5. 19.5. Okay. And after the fact, the ribbon is going to hit this bar. So this is exactly what we're looking for on this trade. Am I still recording? I'm not. Let me hit the record button. Yeah. All right. This trade right here, the Russell trade, it's actually pulling all the way back up here, doing what we wanted it to do. And it hasn't quite hit the ribbon yet. It doesn't have to hit the ribbon. It's just got to come out of the overbought. So we have a sell stop limit here at 19.5, which is 20 ticks below the top of the bar. Now I know that that's going to be exactly where the bar is. The bar is going to close right here at 19.6 because it's a 19 range bar. Every bar is 19 ticks high. So if the top of this bar is here at 21.5 and it stays there, then the bottom can only be right here. And I know ahead of time that if it gives me a down close, it's going to be a trade setup. So I can be proactive and put my order on right there. That's what we're waiting for right now. Okay. I guess we can just wait for this. Okay, I was going to flip over and look at some other stuff, but I kind of want to wait for the Russell right here and let it do its thing. See the numbers down here jumping back and forth a lot. That suggests we're going to be in some chop as it continues looking downward. Okay. Here, I'm going to turn the recording back on right now because we're getting pretty close to a trigger in right here. We want to see the down close here, and the down close here, we're going to be at 19.6, and it'll put us in the trade somewhere right around here at 19.5. Now, just because this is the sell stop limit does not mean that I'm going to get filter at 19.5. Okay. And there was something, I had an email from one of our guys last night who had an issue with something that he had automated, somebody had written for him. You know, there's different kinds of orders, sell stop limit orders. There's a fill or kill. There's a stop market. There's a market if touched. There's a limit. The only one that really means you're going to get filled there is going to be the fill or kill. It's going to fill all the contracts at that level, or it's not going to fill any of the contracts at that level. All right, and even that one, you're still going to get slippage. But if you have an order on here that says market if touched, that means price just has to get to that level and it's going to go to market order. So you have no idea where you're actually going to fill. It'll be somewhere in that area, but you don't know where it's going to fill. If you have a limit order, it's going to be closer to that area. Still no idea where exactly it's going to fill. If you have multiple contracts like this, there's no guarantee it's going to fill right here. If you have a market order, then again, you have no idea where it's going to fill. If you have a fill or kill, it's going to fill all the contracts. It's going to try to fill all the contracts right here. All right. If there aren't 11 available for me right now at this level, like right here, you don't see 11. It would not fill me it would go right through it without filling me. Okay, it's important to understand those different types of orders. The filler kill is something that people rarely use. Market order is something that people commonly use, and that's, if you're trading on a large time frame and a couple of ticks of slippage isn't a big deal, then that's not a horrible way to get into a trade. But if you're trading on a smaller time frame and you only have 15, 20 ticks of risk, then you don't want to risk 5 or 8 points of slippage, because that's half of your stop. Okay. All right, I'm going to pause the recording again because this is moving farther away from the actual entry point. This Russell trade is just taking forever today. It just closed up. It didn't close down. So now the order's going a little bit further. The high of this bar is still 21.8. So we're going to be selling 19.8 now. Selling 19.8. And this yellow dot is what I drew in there. Let's see if it gets up into the yellow dot. Hasn't quite made it there yet, but yes, I will too, Hal. I've been through that. All right. I'm actually at the beginning stages of that now, again. All right. So here we go. The recording is back on. We ended up moving up a little bit more. Now the ribbon is still spread. You can still see all 4 lines in the ribbon. So now we're selling right here at 20.1. 20.1. The high of the bar is now 22.1. So I'm selling 20 ticks below the high of the bar. Still a great trade. We thought it might get up to this level here where that little yellow dot is earlier. It's just looking right from back here. So it's pretty close to that. And this is setting up to be a really nice trade if we get the fill and if we don't run out of time. We only have 7 minutes left. So, well, 7.5. So if we get the fill, this is setting up to be a really nice trade. And this would be a great way to end my Friday's trading. The nice trade right here on this. So hopefully it's going to happen. Hopefully. This video is now 16 minutes long and it's taken me 3 hours so far to make it. So I pause the video again until we get closer to the bottom here. I think it's just not wanting to do it. Am I missing anything else on these other markets? Let's jump off of this for a minute. I'll go back here to just forum. I did miss a nice trade there on the NQ. Just the NQ. Right, this is going higher still. This might turn out to be not a trade here after all on a Russell. If this bar closes out, it's going to crunch up the ribbon, and then it's questionable at best. Okay. And it did close up, and look, it crunched up the ribbon. You don't see all 4 lines in the ribbon anymore. All right, I'm going to have to end the video that way. All right, so back here on the Russell. We missed a great NQ trade while we're doing all that Russell stuff. It was right here. But back on the Russell, you see the bar just closed up. That bar we were watching just closed up, not down. So now you can't see all 4 lines in the ribbon again. If we get down close on this bar, you probably would be able to spread them out and see all 4 lines on the ribbon. But I think this bar is going to close up, and if it does, there'll be 3 lines on the ribbon, and we're going to cancel all the orders, and we're not going to look for the short trade. Now, let me take a moment to cancel this first.
Yeah, I just
canceling this order.
Yeah, on the Russell.
And just to show you from a bigger picture what's happening right here. All right, we were looking at the pullback down here, and this retracement, it's going back into that chop that we had here. Now, that's not bad by itself. When you look at the bigger picture, you're looking at a retracement of the leg down, right? So this is your leg down, like this. And this right here is a 50% retracement of the leg down. Now, if it does get all the way up there into that spot, that 50% retracement spot, right here, it does all the way up there into that spot, then it can disqualify any short trades, right? In this time frame, it's going to disqualify any short trades. Now, on a down close of this bar, if that spreads out the ribbon, and it didn't, see how they just got, there's only,
Did you short?
there's only 3 lines in the ribbon. No, I didn't.
Okay.
There's only 3 lines there in the ribbon, so it's not a valid trade. Okay. You got to have 4 lines. That is the key, is to be with the trend. You got to have the 4 lines. I mean, there's not that many rules. So I'm going to skip this one. If it does go down, then I'll get it on the next leg, but I'm going to skip this one. And so as far as the recording of this Russell trade goes, this is a 50% retracement up into here. If it goes up into there and it gives a short, it moves down from there, it's not going to give any short trades for a while. It's going to have to go from there all the way down to here. So if you look at that leg length that I just drew to come up with that 50% retracement, then what it should do is another one of those leg lengths. Okay. And I'll see in a second if that puts us down near any of the zone. It probably does. This is the midpoint between the zones. So that probably puts us down near another zone right now at the bottom. It does, all the way down to the next weekly trading zone. So I don't see that happening all in one move. What it's probably going to do is make a move down, then make a move up, and then make a move down. And that's probably how it's going to work out today. I don't know though, but I'm ending the video here. Okay, yeah, that video was done. So we didn't end up with a trade here. And if it does actually pull it all together and become a trade, then that's how it should work out. All right, but you see there's only 3 lines in the ribbon there, and I'm not going to risk that. Not today, not on a Friday afternoon, not my last trade. I'm not going to take a trade that's not easy and obvious. These NQ trades over here, this was easy and obvious. This one right here is kind of easy and obvious. Not as easy and obvious as the last one, but it's still pretty good. And it's got a lot of momentum. It just barely came out of the oversold right there. But it's got a lot of momentum, and I'm throwing my stop at break even on it right now. I don't have a very good feel. It just took me out of break even. Okay. The ES trade right here, that was pretty easy and obvious trade. I didn't take that, but that is something that you could still take because it hasn't gone 4 ticks in profit. But I'm not going to do it right now. I am not going to take any more trades right now. It's 1:27, so we have 2.5 minutes left. I don't think anything that I took right now would finish except for an NQ trade. So let's go back and look at the other things that I was looking at. I stopped with the gold, right? And we had looked at the gold here like this. Oops, that's not the gold. We had looked at the gold here like this and said, if the gold drops down below this level right here, then I would expect it to go all the way down to this level right here, down to 2,700. It's kind of important that it doesn't go through here. The chart pattern that'd be if it doesn't go through here is probably its W. And that means it's going to bounce here. It's going to go back up to this level, then come down and bounce again and go up one more time and put in new highs. That's what it looks like from here. But now that we've had this leg down, we've had our 50% retracement, and that was a perfect 50% retracement. It should do another leg down just from basic chart pattern stuff. And let's go to the next one. Let's see what happened on the YM today. Just your basic TV trades from today, YM trades. Starting out here at 932. There was a short here that was enough to get the stop to break even. A long here that was awesome. A short here that was awesome. A long there that was awesome. A short here that was awesome. A short there that was awesome. And a long here that was awesome. So every one of those trades today on the YM was good. And the YM kicked my butt in the morning. 2 days in a row. Let's go out one more and see what we have going on here. This was Tesla. Now, the thing I want to look at on the Tesla is, let's see, I gave myself permission to it here. This guy here. I don't know what this is going to look like. What range am I on? Uh-oh. What did it say? I don't have permission. Access error. I don't have permission. Okay. I thought I gave myself permission to that. I guess not. All right, well, I can do this another way. I can do it this way. There it is. So this does actually try to search out the tops and bottoms. Right? That's what it tries to do. It tries to find the exact top and the exact bottom. And you can see today on the Tesla 50 range, it did not do a very good job of it. Jump out here to the 100 range. I had a little more success with that. Even that wasn't great today. Normally it's really good. But that was a good one. That was a good one. That one pulled back too deep. Right? This one worked out okay. This is 100 range bars, so it's 100 ticks. Every bar is 100 ticks. So if you get just one of those bars right there, that's a good chunk of money. Just one of those bars. It's $500. So But then the stop out is the same way. So put it all in perspective. And expect them to be counter trend. Like when it's going down like this and you're in a big downtrend and you get one of those, it's hard to take that trade and say, okay, I think it's going to turn around right here. I think it's going to turn around right there. But that's what it was designed to do. Just pick those round bottoms as best as you can. If you're doing a micro with this, though, if you're doing just one micro, then it's $50 a pop. And the ones that actually run, where it does pick the top and the bottom, like this guy right here, we're from 261.97 all the way down here to 257.97. So 57, that's 300 ticks, 350 ticks, I think. Isn't that right? 450 ticks. That's a good move.
Russell finally started dropping.
Yep, it is definitely in a drop in a spot right here. All right, so this is saying the ES look for a 7-point drop. Let's go look at
2 break even.
Did you? Okay,
I got
great.
short 21.7 just off my own stuff.
Excellent. And it's suggesting right now, the larger time frame is suggesting that it's going to go down. I'm going to go back in here. It just suggested that there. It was suggesting the YM was going to go up a little while ago. Just now, actually, it was suggesting the YM was going to go up. But that doesn't mean you got to look at the YM in context. You look at the YM. Let's go look at it. I just minimize this. I run over a little bit, but let me just go look at the YM. The Russell is moving down. The ES is moving down. But let's look at the YM first. Okay, the YM back here said it. I'm gonna look at it on the 60 range. That's where the trigger came from. Okay, so on the 60 range, the ribbon is all messed up. So these things, when the ribbon is all messed up, are not as meaningful as when the ribbon is spread like this. So the ribbon is spread like this, then those are much more meaningful. Okay, so you got to keep that in mind. You got to take it all in context. Everything that we do, it's got to be in context. The Russell is moving down now. After doing this, it is moving down.
I went ahead, I chickened out and got out early. I should have let it run.
Okay. Well, it should go down. This is the leg length it should make, right? And that's from right here is the leg length it should make. That's what it should do.
I had profit, so I'm not going to cry about what I left on the table as I preach.
At least down to here is where it should go. At least to the swing low is where it should go. And if it goes through the swing low, it should go all the way down here. Now, what I was saying earlier is I don't think it's going to do it all in one move. I think it's going to go down some, pull back, give you another leg. And that's the one that you would get in on. It looks like it's trying to get down to the weekly trading zone down below. That's what it looks like to me. All right. So I'm going to wrap it up. I've run over. I'm sorry about that. Let's go here and say this one more time. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. When you do that, you're going to be brought to this registration page. It's got all the next week's stuff in it. Get in there, register, and we'll get you all your indicators indicating. Ready to go. If you do it today, you get your indicators indicating for the whole weekend and all of next week. Okay, the whole weekend and all of next week. Now, that is it, guys. With that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Okay. There it is.
Recap of the morning session.
Today, it took 71 minutes and 16 trades to get to $1,540.
Way to hand there. Sometimes, guys, nobody here walks on water. Okay? You just got to deal with the market hands you. And some days, you get it on the first trade, and some days you don't. You just got to accept that. Okay, we covered all the indices. We're now on crude. Okay, see how when price hits a weekly zone, we expect resistance 70% of the time. It will consolidate, and it finally overcame it. Okay, this was the open last night. The step line crossed blue and climbing. Price tried to retrace to the BBC. That's what we expect to happen. But when it failed to do that, it was a sign of strength. So we got a leg and a retracement, and then a leg that took us to the tick. was to the tick. Yep, exactly to the tick. 71.45, a long target. So when the market finds resistance, it's going to go look for support, which it found at the BBC, the pullback holds more often than not. We bounced, but we put in a lower high. High, lower high. Sign of weakness. Blue and climbing turns to red and falling. Price gets below the BBC. Down we go to the zone where we consolidate for an hour and a half, 2 hours. Now we've dropped further. And I think I have a crude short trade out there somewhere down in this area. Which, it's kind of a bummer that the step line is starting to angle to the right. Because if it crosses, see, the crude alert that I had in Logic 247 was to get down to this zone. I just can't remember what my entry price was off the top of my head. If the step line crosses red and falling, then price will most likely retrace to the BBC. It might retrace to the zone and consolidate there, and if it consolidates sideways, then the BBC will drop to meet price. So, anyway, gold. Okay, gold. What happened with gold? We opened below the BBC, but we had blue and climbing. See that right there is conflicting. Now, as price got above the BBC, along with blue and climbing, that's very positive. Perfect stack. Price, step line, blue and climbing, BBC. And we made it. We were 5 ticks shy of hitting the target. Now, this candle opened at 2764.80. Let's just call it 2765. And it ran up to 67.5. So just this wick. See, this was a green candle. $250 per contract traded. Then it came back to support. And a lower high, and then a lower low. Then we go back to the zone. Now, check this out at the zone. See, this was a green candle all the way up, but it got slapped way back down here by the time the 30 minutes was up. So then they tried it again. They even managed to put in a higher high, but by the end of the 30-minute period, it got slapped all the way back down. Slap back down, slap back down. When you see that, 4 wicks, or 3, I'm not saying exactly 4. I'm just saying when you see a series of rejections like this, expect lower prices. Now, the reverse would be if you saw a bunch of wicks to the downside, the mirror or polar opposite of this, then you'd expect higher prices. But this is telling you to expect lower prices. And look what happened. We got a bearish cross right there. Red line got below the green line. And down we go. And we just hit the weekly zone at 27.47. I think I had a trade in there somewhere, but anyway. Valor will recap it tonight. Now, red line got below the green line. That's a bearish cross. When does that become important? When price, whether it's a day, a week, a month, or a year, when price gets back to this area right here, 2760, expect that to be good resistance the first time up. Okay? Now, does that work 100% of the time? No. Few things in the world of trading work 100% of the time. Okay? Now, see where we're at on gold? We're snugged up right against this low right here from yesterday. The vertical lines separate today, Thursday, Wednesday. These zones that are doing such a fine job today, okay, and yesterday, were published Monday morning at 6:15 a.m. Eastern. The beauty of the zones is it gives you a playing field for the week. Okay, We don't expect price to close above the highest weekly trading zone or below the lowest weekly trading zone. And all the zones in between serve as resistance and support till proven otherwise. Now, see how these spiked but then pulled way back? We've now traded below the zone, but we still got 20 minutes left in the life of this candle. I was trying to get to this short target, which is this turn, right where the market made the turn. So we're not going to hang out and watch it, but would I give a green light to a trade such as 27.44 to 27.43? Yes. 100% yes. That would be enough to get your goal for the day. And if that happens, then there's a good chance you'll go to the zone, which is 41/42. And if it hits 42, then that would be $200 per contract traded. So this is a good setup. 27.44. Initial target 43, $100. Next target 42, $200 per contract traded. Okay, that brings us to our final market, silver. Silver opened last night trapped between blue and climbing bullish, the BBC, which we expect to be resistance because we're below it, and it was. And then this low right here, when price started to drop, see this low right here? We spiked it just a little bit, then we got back above the zone, pull back to the BBC, and ultimately the market just fizzled out right here for no obvious apparent reason in this time frame. Now we could go chasing time frames and find a reason on some other time frame, but please don't do that. Okay, like I've told you, there's nothing magical about a 30-minute chart, but it's the chart I've chosen to work with and have been with for many years. Okay, so obviously on some other time frame, price ran into some major resistance and it just couldn't break through it. Okay, so the market reverses and it goes all the way down to the short target, to the tick support. Now that support was where, see right where this thing, see how I rounded, that rounding bottom there, J-Lo bottom. Okay, so we hit it, support, and it bounced us right back up to resistance at the zone. Then we even hit the BBC. But we had red and falling overhead. That's an indication we're going to get lower prices. And here we are, right back at the zone again. Now the lowest weekly zone for silver this week is way down here at 31.36. Now we had a couple weeks where on one or two markets we actually closed above the highest zone or below the lowest zone. I think this week we're going to close inside all the zones, which is historically what we've seen over the past 15 years. I don't know, 95% of the time, which is pretty good for a 15-year run. God's been good to us. All right. Now remember what I said earlier in the broadcast. We had a technical bounce from the 24% fib retracement to the 24% fib extension. I said, but the question is will the institutional traders who move price, are they convinced enough? Because this was a purely technical bounce, because we had bad news this morning. That's why we're technical traders, because in my opinion that outrules fundamentals. So if we close where we're at right now, I mean, we still got hours of trading left. Futures trade to 5 p.m. Eastern. But that last hour, once stocks stop trading at 4 p.m. Eastern, that last hour is usually real quiet. So, but we are in earnings season, so do what you want to do. If we close below the low of the day, let's see, yesterday's low was 33 and a quarter. Today's low so far, 32 and a half. So we've actually taken out just slightly yesterday's low. But see, you can tell the institutional traders haven't given up yet. They keep buying the dip, hoping to run it back up. But from where I sit, the fact that we got red and falling overhead, about to make a bearish cross on the daily BBC, and then we've got, I don't know what economic news we have Monday. Here, let me check real quick. Because the election's Tuesday, right? Must be. Okay, let me go to next week. Monday. Monday's a holiday in Japan, Culture Day, and it's a holiday in Russia, Unity Day. But in the US of A, what do we got? We have no high impact news in the US on Monday. How about Tuesday, the day of the election? They've got the US presidential election listed at 6 a.m. Eastern as high impact. But other than that, so we got no high impact news Monday, and the only high impact news Tuesday is at 2 o'clock on Tuesday we have a 10-year note auction, and they've got that listed as high impact. And 11 o'clock on Tuesday we have ISM non-manufacturing PMI. Really? Tuesday, November 5th. Yeah. It's an odd time. Get an unlisted number. Okay. All right. I guess we've done all the damage we can do for the day. Now, if you're ready to become a member, send an email to support@cfrn.net. In the subject line, you can be funny, you can be clever, but say, I want to become a member. Valerie will respond. She'll give you some information. There's a couple choices to make. And then there'll be a link you can click to become a member. Once you become a member, then she'll send you additional emails that you should put away in a folder somewhere. Because there'll be stuff in there you don't even understand what it is. But after you get trained for a few weeks, okay, you'll know what those things are for and you'll start using them, okay? If you lose the email, we'll send you another one, but it's better if you just hang on to it, okay? Alrighty then. When you become a member, you're going to get 2 hours of live training every trading day. If that weren't enough, you also are able to get one-on-one private mentoring. All you got to do is book the session. There's no additional charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. You get the Logic 247 alerts around the clock. You get the concierge trade alerts every night, the second they're published. Monday morning, you'll get the weekly trading zones, 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And you'll be able to attend the members-only workshop every Thursday night, 8 p.m. Eastern. And you'll get the key to the vault, where there's hundreds of previous workshops. Do you need to watch them? Not really. But there's thousands of teachable moments in there, so help yourself. Okay. Yesterday, our good word for the day was how to develop patience, which is, I said earlier, every trader needs patience and self-discipline. Now, we can give you the information, we can teach you the things you need to know. We'll provide you with the tools you need to get the job done. But all the information in the world and all the tools in the world will do you no good if you don't have patience and self-discipline. We can't give you those. I can work with you in one-on-one mentoring sessions, and we can do exercises to, blah, blah. But really, it's between you and God. Proverbs 14:29. Whoever is patient has great understanding. Patience begins by changing the way you view something. When you're impatient, you have a narrow perspective. All you see is yourself, your needs, your goals, your schedule, your desires, and the way people are messing up your life. Basically, the root of impatience is selfishness. In trading, it's like, well, I don't want to wait for the setup. I just want to click the mouse and make money now. You got to get over that, okay? If you want to succeed in marriage, learn to see life from your partner's point of view. If you want to succeed as a parent, learn to see things from your child's point of view, but don't forget, you're the parent and they're the child. Sometimes when I'm out and about, I don't leave the compound too often, but when I'm out in public and I see some child running the family, telling mom and dad what they're going to do and not do, and I bite my tongue, because it's not my business to get involved in how they're raising their kids. Did I do a perfect job raising my kids? No. But I did the best I could. Anyway. If you want to succeed in business, learn to see things from your customer's point of view. If you want to be a successful employer, learn to see life from your employee's point of view. And if you want to be a successful employee, learn to see life from your employer's point of view. What I'm trying to say here is try to discover why the other person feels the way they do. If you never had to deal with irritations and interruptions, you would never develop patience. You must accept the truth that God is directing your steps and that trust doesn't require explanations. The Bible says in Proverbs 20:24, the Lord directs our steps, so why try to understand everything along the way? Patience is a mark of maturity. When babies don't instantly get what they want, they get upset. Maturity includes the ability to wait and to live with delayed gratification. Proverbs 14:29. Whoever is patient has great understanding, but one who is quick-tempered displays folly. There's a very famous university study done on a group of children, many years ago. I think this was back in the 70s. They gathered a group of children and put them in this room, and they all were sitting at this big table, or small tables, I don't know. And they put a piece of candy in front of each child. And they said, you can eat that piece of candy right now if you want to. But if you wait 30 minutes, I'm going to leave the room, but I'll be back in 30 minutes. And every child who has not yet eaten their piece of candy, I'm going to give 2 more pieces of candy. The study didn't end there. They followed those children for 30 years. The ones who were willing to express delayed gratification. In other words, I can go without a piece of candy for 30 minutes if that means I'm going to get 3 pieces of candy. Now, some of the kids couldn't resist. Sadly, those kids, their lives didn't work out so well. A lot of them ended up with employment problems and problems of addiction and problems in school and work, but the ones who waited, who displayed delayed gratification, they were the high achievers out of the bunch. Now, I'm not just making this up. I think it was Stanford that ran this study. I mean, it's public knowledge. You can just Google it. Just Google university study about children and candy and delayed gratification, and you'll find it. And I got some of the numbers wrong. That's okay. You got my point, right? A person of understanding and wisdom who learns to see life from another's and God's point of view displays patience. So pray and ask God to give you a new perspective on things. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.